Thank you so much for joining. My name is Teddy, and I will be the moderator this evening. I'm going to introduce the other panelists in just a second. But I wanted to say again, thanks for joining, and a few quick announcements and housekeeping before we get started. There is a chat box in the lower right-hand side of your screen. If you don't see it, you can press chat on your Zoom window, and it should pop up. Feel free to ask any questions you have throughout the presentation in that chat box. We'll all be monitoring it, and we will answer any questions you might have if they pertain to the broader group. Now, we know that a lot of financial aid and financial planning is very personal and very specific, and so we totally understand if you don't feel comfortable asking personal questions in a chat forum like this. So because of that, we're offering a couple opportunities for you to ask questions on more of a one-to-one level. I'm going to give you more information about this at the end of the webinar, but just to kind of preview, yeah, Matt, you can go ahead to the next slide. Thank you. Included in your attendance this evening is a free post-webinar phone conference with one of our experts, and that's just a quick opportunity for you to ask any questions that come up during the webinar that you don't feel comfortable asking in the chat. And then secondly, we're also offering a 1-hour free personalized financial aid deep dive, and that's with our founder, and we'll give you an opportunity to really dive into all of the strategies that we're going to be talking about tonight, specific to your family's financial situation. So again, I'll share more details about that later on, but I wanted to just give you a heads up that if you have questions that come up throughout this, we're going to be throwing a lot of information out at you, so you will have an opportunity to ask any questions that you do have. So we are new to webinars. We normally do in-person events throughout the Chicago area at public libraries and schools and churches. But like everyone during these times, we're adapting. So if you notice any technical difficulties, we apologize in advance. And I'm sorry that we already had one technical difficulty, but we're going to be working through it and trying to resolve everything and give you the best experience possible. So thanks for working with us. With that, I think I want to go ahead and introduce our panelists for this evening. Let me share the screen so that you can see them. Sorry. Okay, you'll be able to see them when they talk. We have Matt Grzetic, who's going to be speaking with you first, and he is a financial aid expert with more than 10 years of experience. He currently works in the financial aid office at a large online university, and so he's dealing with this stuff day to day. He's an excellent resource. After that, we're also going to be hearing from Shane Cole, who is an award-winning college and scholarship counselor at a public high school in Addison, Illinois. And he has a lot of information about the application process as well as scholarships. So we have a great lineup for you tonight. And with that, I'm gonna go ahead and turn it over to Matt.
All right, thanks so much, Teddy. I appreciate that. Like you said, my name is Matt Grzetic. I'm a client service manager here with my college planning team. So I'm going to be walking you through some of the financial aid side of things and kind of get you in touch with some of those. And Shane's going to talk with you about the academic side. So as we go through this tonight, you're going to see that we have to have them together, right? You can't have one without the other. I can give you the best financial plan and say, hey, this is the best way to do this. But if you don't have that right fit for a school, it's still going to cost you more money in the long run. So Shane and I are going to be kind of tag teaming this a little bit tonight. So you'll hear from me for a few minutes here. I'll give you a little bit of an introductory. And then Shane's going to come through with the academic piece. And then I'll wrap up with some of the financial pieces of that. But wanted to share a couple of resources here with you. So these are going to be resources free of charge here for you. Finaid.org is the one that I would use as a financial aid professional, right? So when I have a question about how something applies to account, where it might go, Finaid.org is the resource that I would be using. So it's a great place to ask any questions that you might have and try and determine, how something might apply for your financial aid, scholarships, loans. So it's a really excellent resource for you. The other one is going to be colleges that can change lives. So, on the academic side of things, this is kind of opens up some new possibilities and new ways of thinking about how you choose that college. And Shane's going to take a little bit of a deeper dive into that as well as he goes through his part of the presentation tonight. So a little bit about us, a little bit more than what Teddy kind of gave us at the beginning here. We are a team of over 25 academic and financial aid professionals from both the public and private sectors who are working together to help families prepare on how to pay for college. All of the members of our team must meet rigorous professional standards and be committed to ongoing professional development. We're going to show you some college reports here a little bit later in our presentation. All of the information that we're providing is through our software, which has been reviewed by the Financial Industry Regulatory Authority. It just allows you to know that you can rest assured that this is the information is accurate and it's all legal. And our academic team is always anybody who's going to be working with my college planning team has master's degree or higher. And again, like we talked about with Shane, award winning and been in the high school area for significant portions of time. So our mission is to use the power of our team so that no stone is left unturned to help families cost to reduce those costs and make sure that that's the right fit. Again, I'm going to say this a couple of times here today. You can have all of the financial plan in place, but if you don't have the right fit, it's not going to work out in the long run. So you have to make sure you have both of them together. So a great resource that we've got here is from Kelman Cheney, Paying for College. He's got the book on this, so some great resource again if you're looking for more information. But he's got a really great quote. It says, "When it comes to paying for college, there are two prices: one for the informed and one for the uninformed." Right? I've always found that quote to be very interesting. Right? I've worked in college my whole life. I'm like, the price is the price. It's listed right there on the website, but it's not. It's not as bad as buying a used car, but sometimes it can feel that way, right? So tonight we're going to start the process of getting you informed about how the financial aid system works, so that you can benefit from it instead of it taking advantage of you and going broke in the process. So where can we look? There's a couple of different places, right? First one's going to be private scholarships, right? They're great. You've heard about all of these before. If anyone's been through this process, it's, oh, private scholarships are great, and they absolutely are. However, they can be a little difficult to find sometimes. So Shane's going to go through that a little bit with you and give you some suggestions on scholarships here in just a little bit. But what we want to be looking at is there's some red flags even with those private scholarships, right? You want to check the college's website to see how they treat private scholarships. Um, you want to try to determine if they're going to let you use that private scholarship to fulfill your unmet need. And we're going to talk more about that tonight. So some of these terms will be more familiar to you. But they may just be reducing any need-based aid that's already there from another scholarship. So you just want to make sure that it's getting looked at correctly. You want to make sure you know the policy of the school. You can also go to your high school counselors. They're great resources, and Shane is one of those, right? He'll tell you about his caseload, though. At some points, he's looking at 450 students to one, right? So they're overloaded. They do their best with what they have, but they can't always be giving that extra attention sometimes. So we have to kind of fill that role in as parents and loved ones. Um, you can go to the college. Going to the college is kind of like going to the IRS and asking them if they'll reduce your taxes. They're not really interested in helping you in some of those things, right? So you can't really, reach out to them for that extra help. And finally, the family accountant. And Kelman Cheney's got a quote about this. So if there are any accountants in the audience today, again, these are Kelman Cheney's words, not mine. But accountants are in the business of reducing your taxes, right? So he's saying that tax accountants who do not understand the financial aid process, and that experience includes most of them, can actually hurt your chances for financial aid. Right? They're trying to reduce your taxes. They're not kind of looking at it the same way and saying if they reduce your taxes or different credits, they may be significantly reducing the amount of financial aid that you're also eligible for. So you really want to make sure that your accountant knows both sides of the coin and not just one. Now, this is going to be the scariest slide that I hope to show you tonight. So these are some numbers, and they're scary, right? You're looking at them and saying, "Wow, that's a lot of hundreds of thousands there, right?" So, cost of a public university for 4 years, 115,000. If you're looking at out-of-state tuition for a public university, 162,000. Average cost of attendance for a private college is 203,000, and if you're looking at those elite universities, you're up almost over 300,000 at that point, right? So that's those are some big numbers, right? The scariest part about this slide is that if you look at the bottom here, it says that tuition is increasing at twice the rate of inflation. So each year, tuition is increasing roughly about 4 to 6%. Those are big numbers. Those are scary numbers, right? And trying to think about it, you're sitting at home right now thinking, Matt, is this even worth it? Why are we listening to this? Well, don't turn off the presentation quite yet, because we'll talk with you about that. Because we do know that it is worth it, right? I can show you all the statistics that shows that this is worth it. Somebody with a bachelor's degree versus someone with a high school diploma is making almost $1 million more over the course of their lifetime. If you go up to the professional degree, you're looking at almost $2 million more. So we do know that it's worth it. We can see that, and the numbers bear that, right? And 92% of families do feel as though that this is still a good investment as of 2019. So still a good investment there. Now, 92% of the people think that this is a good investment. And I'm going to have Teddy put a poll question up here real quick and say, do you have a plan in place? Are you one of the 92% that do? So just take a few minutes. I'm going to pause right there and let you get some information there. So I'll give you a couple minutes to answer that. All right, let's take a look here, Teddy, if we can roll those results and see where we're at. Okay, so looks like we're split here, right? So we've got some people that don't have a plan in place, or partially don't have a plan in place. So that's all right. You're here tonight, and that kind of fits with what we're talking about here. 44% of families don't have a plan in place for this. So a lot of people are saying it's a good idea, but they don't have a plan in place. So you're kind of coming up short, right? So you're here tonight, you're taking those first steps to making sure that you're informed and putting that plan in place to help you cover those college costs. And thanks for sharing that information on the poll there. So basically, like I've talked about several times already, and I'm going to keep harping on it tonight because it really is true. You've got to have a financial plan in place, and you have to have an academic plan in place. There's no two ways about it, right? Basically, you have to have one. You can't have one without the other. Too many families we often see come in and they're only focused on the academic side, right? They want to make sure their child's getting the best grades possible. But then they're not really looking at the financial aid side and not knowing that these strategies in place. So I'm going to go ahead and turn it over to Shane here. He's going to talk a little bit about the academic side of things, and then I will come back in just a few minutes and talk more about the financial side of things. So Shane, go ahead and take it away.
Thanks, Teddy. Thanks, Matt, for the introduction and the kind words. Thank you, Teddy, as well. As we move along here, the 7 points that I'm really going to focus on are going to be these 7 points that you see in front of you, and I'm going to explain these a little bit more as I go along. As Matt and Teddy introduced me, again, my name is Shane Cole. I work at a suburban high school outside of Chicago. We're about 15 miles just west of Chicago. I have been there for 25 years. For the last 16 years, I have been the college and scholarship counselor. It's a great place to work. I'm lucky to work there. And I have been, again, over the last 16 years working in that area. And I also have a daughter that is a sophomore, and I have a daughter that is a senior. So I am really in the middle of the college kind of the search process for one is over with, and then the sophomore I will be starting very soon. So I'm going to make sure that I relate some of these personal stories to you. So the 7 strategies we try and use are finding your best fit, choosing schools where your student can be in the top 25% of the incoming freshman class. We're going to talk about improving test scores so you can get more merit money. We're going to make sure that we're interested, show a lot of interest in those top 3 schools once we narrow those down. We're going to give you some tips for writing an outstanding essay, which can get you more money or make you pay less money, one or the other, which is the same thing. We're going to look to test out of required classes, whether it's through CLEP testing or advanced placement testing, international baccalaureate, or through dual credit courses, which are becoming more and more popular. And then hopefully your student can graduate in 4 years or even less in some cases. So one of the tips that we want to do is we want to start early. So hopefully most of the people that are with us tonight have students that are either in 7th grade, 8th grade, possibly 9th grade, and then we're heading into the summer of 9th grade, going into 10th grade. We want to make sure that we start this early. Starting the process early really gives you a good chance to look broadly at schools that your child may be interested in. And it also allows you proper planning time for course selection through that 10th, 11th, and 12th grade. And the course selection in high school can be one of the things that really helps you save money. The other thing that it does is relieve some stress for you. The more familiar that your kid is with going away to schools, taking a general look, whether it's 9th grade, driving through the campus, just taking a little visual overview, 10th grade, getting into visit, 11th grade, getting into do an official visit, speaking with professors, speaking with the academic programs there. So starting early is really a big key, kind of having a plan in place as you go along. Okay, so in finding the right fit, financially the right fit, and also academically the right fit are 2 big keys, but also potentially the size of the university is also a big key. So we want to be looking at those things early on, 9th grade, 10th grade, 11th grade. Have a good idea of what your financial situation is so you know what you can afford, so you're not just looking blindly. And then we also want to research your child. Can your child be in a class of 800 kids in a intro to psychology class that they may have freshman year? Or do you have a student who is going to need a smaller atmosphere? Do they need a college or university that offers a freshman seminar where every freshman is matched up with a professor from the university that kind of keeps an eye on them? So those are really some things you want to kind of keep an eye out for. Make sure that you are researching the colleges as well. So you got to make sure that you kind of start that homework early. All right, so finding the best fit. Have in mind who your kid is while you're kind of going through this. Academically, can they excel there? Can they do well? Can they be 3.25 GPA or above, where they are in the running for more scholarships once they get to the university? Okay. The last thing we want to do is we don't want to send our son or daughter off to a school where academically they're going to be in over their head. They do poorly. They maybe have to transfer. I always use the University of Illinois at Urbana-Champaign as an example. They have a really great engineering program there. You know, no joke, they're nationally known for their engineering. It is not fit for every kid that is good at math or science just to throw them into the U of I's engineering program. It's got to be the right kid. It's got to be the right academic fit, because if not, they're going to get chewed up and spit out by that first year on campus. Okay, financially, is it a good fit? We certainly, as Matt is going to talk about more as we go along, as he goes through the financial piece, we don't want to be swimming in $200,000 worth of debt because we had to send our kid to a school that we really couldn't afford. Also, as you're looking for the best fit, what is the learning style there? Again, large classes or smaller classes? Is it a school that is on semesters, trimesters, or are they on the quarter system? Like I said, I live in Illinois, work outside of the city of Chicago. We send a lot of kids from our school to DePaul University. DePaul's a very nice place. They're on the quarter system. Those kids there are only going to have 1, 2, 3 classes at the most per quarter, and then they're going to have 4 quarters through the school year. So again, what is the learning style like there? You have to keep that into account as well. The environment, the physical environment of the university itself. Is it out in the middle of nowhere in a town that has 4,000 people surrounding a university of 1,000 people? If you're coming from the suburbs of Chicago, you send a kid out there, they might go through a little bit of culture shock. Maybe they've never seen tractors and combines before, so they may get a little bit alarmed. Or are you taking a kid from a rural setting and sending them into DePaul or the University of Illinois at Chicago in an urban setting? So make sure that the environment is right. Like I said, I have a daughter that's a senior. Couldn't see her going to school at DePaul or Loyola or into the big city. I think it would be a great fit for her. Socially, culturally, the right fit. Make sure that that works out for your child as well. So socially, are they going to be enough to do? You know your kid better than anybody else. Make sure that it's going to be a good social or cultural fit. And then scholarships. What are the opportunities for scholarships for kids as they come in? As freshmen, are there opportunities for scholarship money? And are there scholarships available for the kids once they're at the university as well? Now, here's some really great ways that some kids and some parents choose their universities. Okay, so students are going to look at things like this. Your students are going to look like things like this. Are my friends going to go to school there? Okay. Is it a great party school? Do they have a great football team? Because that's important to me. Really important to me. May not be so important to you as the parent. Is it warm in the wintertime? Everybody would like to go to a school, well, not everybody, but a lot of kids say, oh, I want to go to school and I want to go to the University of South Florida because I know it's on the beach. Well, it's not. It's not really anywhere even near the beach. So again, we got to be smart about where we're choosing. Maybe the school is ranked #1 for something. Maybe they got the best accounting program or something like that. So you got to be careful where you're choosing. It's got to be kind of a broad selection of what you're looking for. Now, how parents think. U.S. News and World Report rankings will rank it really high in one program, but not so good across those other ones. Well, if your kid gets in that program, doesn't work for them, and then they have to transfer, is it still going to be a good place for your kid to go to school? And if they do transfer within the university from a business major to an education major, can they still get out in 4 years? So we want to think about those things as we're going in as well. Parents say, hey, it's my alma mater. I want my kid to go there. U of I, Urbana-Champaign, much different cost for the parents as it is for the child to go to school there now. And U of I is really not giving anybody a really great deal. So we got to be careful about choosing alma maters as well. We think we can afford it. It's close enough to home. Those are sometimes what parents think. Parents think sometimes the decal is going to look really great on the back of their car and it's going to impress everybody in the neighborhood. But again, it's got to be the right fit for your kid. So we really got to be careful about, finding the right fit for our student. The second point on those list of 7 that we had is where we want to pick a school where our student incoming into the university is going to be the top 20% of the freshman class. Why? They can be in the honors college, and more than likely, it's going to give them the best chance for merit money, free money that you are never going to have to pay back. Okay, that merit money, most of the time, if you apply early to most schools, they got a great big pool of money out there. But as it goes lower and lower, the pool of money kind of shrinks. So we want to be on time, and we want to be one of the smarter kids that is applying to that school and getting in. Again, also, it might allow us to be in the honors college. The honors college at some schools, at most schools actually, really have a lot to offer. Early registration for classes, specific scholarships that are particular just to the honors college. So if we can be in the honors college at university, it gives us a better chance to meet with professors, academic advisors for just students in the honors college, first chance at scholarship, first chance at internship and stuff like that as well. So we want to be certain that that would be a good goal to have, is being in the top 20%. Scholarships. Matt mentioned earlier that scholarships, they really are a great way to help supplement the education. There are places out there where you can find them. A lot of students, a lot of parents think, well, if I apply, my kid's never going to win. There's going to be thousands of kids that apply for that. That is not always the case. Scholarships are just like the lottery. If you don't buy a lottery ticket, if you want to win the Powerball and you don't have a Powerball ticket, you got no chance at winning. So scholarships, you got to play to win. As early as their junior year, they can set up a FastWeb account. FastWeb, pretty simple to use. You go online, you create an account. Your kid then downloads the app on their phone. The best way to get a hold of your kids is through their phone. So that's why FastWeb created an app. and it updates them every time they are eligible to apply for a certain scholarship based upon the information they put in about themselves on fastweb.com. So FastWeb is a really great search engine for scholarships. Check with your employer, union. If you're a union employee, check with your church. A lot of high school guidance web pages, you specifically have to go to the high school web page, the high school guidance counselor web page, and look for scholarships there. I know that our school, we offer, or we post usually between about 100 and 150 in the spring of their senior year, fall and spring of their senior year that our kids are eligible for. Go ahead and check the college and university the college and university website as well. And then also check the individual departmental scholarships within the university itself. So Northern Illinois, for example, they offer scholarships for incoming freshmen. Also, the College of Nursing within Northern Illinois University offers some specific scholarships as well. One key thing, never pay for a scholarship application. Free money should be free. So if the scholarship application is asking you to pay a fee to apply for it, it is a scam. And then also be careful on the scholarship. Some scams are out there where you're entering in your birth date and your social security number. That is definitely a no-no. So be careful. If it looks a little suspicious, it probably is a little suspicious. So be careful. Increasing merit aid. Again, merit money is free money. We want to make sure that we're improving. One of the ways to increase our merit aid is through your high school grade point average. Another way to increase merit aid is improving test scores, whether it's ACT or SAT. Most schools do not care which one you take. The state of Illinois offers every junior, except for this year because of what's happening in our state with the COVID-19. The SAT will be canceled. It was scheduled for April the 14th. It will not be happening this year. There is some talk that the state of Illinois is going to maybe allow for this year's juniors to take that next fall, the SAT, when they return to school for the fall. So back to increasing merit aid. Merit aid is used by the university to get kids to go to school there. They're looking for bright kids who score well on tests because they can post it on their website and talk about what a competitive university they are, okay? So again, those test scores don't just get you in, they really reduce your overall cost, okay? So we wanna make sure that if we are going to invest in tutoring, we are going to invest wisely in tutoring, and that tutoring agency or whoever they are have information up out there about how they're going to help increase your test scores. There's a lot of tutoring sites out there, a lot of Huntington, Sylvan Learning, great places. But again, be wise about what you're spending your money on for testing. Here's just a little thing, a little chart that shows both resident and non-resident scholarships from University of Miami, which is in Ohio, not the one with the palm trees. This is the one in Ohio. So the difference in test scores, as you look at this, improving your ACT score or SAT score by just a few points can make $4,000 to $8,000 to $10,000 difference in merit money that you don't have to pay back per year. So that could be up somewhere between $24,000, $32,000, $40,000 over the course of 4 years. Okay, 4, show demonstrated interest in your top 3 schools. Juniors right now are in kind of a tough spot because they're having a hard time going out and visiting schools. You can do virtual visits. I have been receiving probably close to 10 emails a day since the university's closed across the country. Probably 10 emails a day from different universities about how they have virtual tours. When you go online to take the virtual tour, you're actually signing in and they're tracking your name and your student's name and their email address. So that's a great way to show demonstrated interest. You also have to articulate your fit, why you're going to be a good fit for the university. So again, demonstrating your interest in the school, going and visiting, revisiting, possibly revisiting again to showing schools, hey, I'm really interested in this university. I'm really thinking about coming here. which makes it easier, as Matt is going to talk to you about later, about going back and telling the financial aid department, listen, I've been here a few times. Is there any way we can increase my financial aid package? A lot of competitive universities, I'll use Northwestern for an example. Northwestern University is in Evanston, really great place to go to school. Everybody that applies there looks really, really similar on paper. So everybody's really smart. Everybody's been the president of this club or that club, and everybody's got a really great ACT score. So when it comes to competitive universities, writing an outstanding essay is going to be one of the things that really gets you in the door, and then also gives you an increased chance for increasing your merit money, the free money that you don't have to pay back. Okay, so I would encourage your child to not just regurgitate about what they did during 4 years of high school. Talk about lessons that they learned in high school, not just, hey, I was a president of the chess club, which is a great thing, but don't just tell them that. They can read that from your student resume that you're more than likely going to submit online anyways. Talk about things like, I showed a lot of grit because something bad happened and I was able to overcome that, okay? Do they have a growth mindset? Is your student open or tolerant to different situations? Those are the things that the universities are looking for. That's why they want you to come there. So writing that essay is really a great way for you to articulate who you are and why you belong at that university. All right, testing out of required classes. We can do that in one of several different ways. Dual credit courses that your child can take in high school will allow them to get credit at the local community college, junior college, and then they can transfer those credits. Taking advanced placement classes in high school or international baccalaureate classes as well. Doing well enough on those classes to get yourself so you don't have to take some of those classes your freshman year. I can give you this as an example. My senior daughter this year, if she would have chosen one of the universities on her top 3 list, she would have gone in with 27 credit hours. 27 credit hours would have almost eliminated her freshman year entirely. So because she had some advanced placement credits and also some dual credit courses through her course selection in high school, it is a really great way to save money and then potentially save the amount of time that you spend at college, or allows you to double major while you're at college as well and make yourself more marketable. Graduating in 4 years. Really easy to say, but graduating in 4 years is a big key. 4 years or sooner. Like I mentioned on the previous slide, if you can get enough classes out of the way for a full semester or a full year off before you even step in, you're definitely going to reduce the cost of paying for your child's education. So the risks are clear. When it comes to graduating in 4 years, we got to be really careful. 30% of the freshmen do not return for their sophomore year. 33% of those kids may transfer to different schools. And then 75% of returning sophomores take 4 or more years to graduate. That's a little scary. So we want to make sure that we're able to graduate from a place within 4 years at the most. Here's a really scary slide. Matt mentioned one earlier about the inflation and the cost of attendance and those types of things. Cost of attendance was based upon 4 years in school, not 5.8 years, which is the average time that kids spend in school. So we want to make sure that we're able to get out of that school in 4 years. Why don't kids graduate in 4 years? They don't have a real good purpose when they get into school. They're just like, I'm out of the house, I'm leaving. And they don't have a real clear direction on which way they're going. So that lack of direction or purpose when they're on campus sometimes costs them an extra semester or 2, which is going to cost you money in the long run. Oftentimes, students limit their options. They don't apply to enough schools. They choose for the wrong reason. They chose it for the fact that the bumper sticker is going to look really good on the back of the car and not because it's a good academic or financial fit. So we got to make sure that we're really smart about what we're going to, once we make that decision for those 3 schools, we got to be smart about our final decision then as well. So admissions offices, here they're looking at when they're going over your kids' applications. What has your student done? So that's achievement. What experiences are they going to bring to the university? And what motivation is it for those schools to take you as a student? A lot of times, sometimes with really competitive places, those things are out of your hand. You might have really great character, but some schools are going to say, listen, we need a trumpet player in the marching band. This kid plays the trumpet, your kid doesn't, so they may be taking that kid. But again, we want to make sure that we're really doing a good job of showing the universities what our character is based upon achievement, experience, and being motivated to go there. And then when we do the college search process really well, this is kind of like a little arrow that points to success. Understanding what fits your student, you and your student as the parent, okay? Doing thorough research, having really great visits to those 3 schools that we're really considering, and then having a great application and getting that application in on a timely basis when there's enough money, free money out there that they're still giving away. With that, I'm going to hand it back to Matt, and Matt's going to talk to you about funding strategies that'll get you through the next 4 years as well.
All right, thanks so much. I appreciate that, Shane. So, like he said, I hope you're feeling good now, and everyone's kind of got a good idea of where they're at. Picking the college for the right reasons, and everything's going good. And now we're going to talk about how we got to pay for it. And I can already feel it, even over the internet, of just a deflating feeling that's happening. But we're going to take that feeling away here. So we're going to get you informed on some of these strategies that are coming up here. So we've got a couple different things that we want to talk about here. So we've got groupings 1, 2, and 3. The reason we've got them grouped in this way is because each group is going to have a different set of rules that you want to be looking at. So you're not, I shouldn't say rules that you want to be looking at, a different set of things that you should be trying to maximize as we go through this. So group 1, if you've got an household income of less than $50,000, your job is going to be to make sure that you are maximizing all of the gift aid that's available. So any federal aid, any state aid, any grants, anything that is something that you don't have to pay back, you want to be making sure that you're maximizing those. Group 2 families have the greatest challenge in trying to figure out how to pay for college, right? You're kind of your middle income families. You're both trying to figure out how to save enough, but also trying to make sure that you're covering the bills at the end of the month too, right? So you're going to fill out your FAFSA, and the government's going to say that you have a lot of money to help cover these things, but you're like, where? I'm not seeing these same things. You're looking at them differently than I am. So the strategies that we're going to discuss tonight are really going to be applying to the group 2 family, which is household income of 50,000 to 200,000. Group 3 families, you're going to have less of an opportunity for that need-based aid. Group 3 families are usually needing to apply some advanced tax strategies to really get an impact on what they pay for colleges. So all of these things are things we're going to kind of go into a little bit deeper, but it just kind of gives you an idea of the different strategies that each group is going to be using. So how are we going to pay for this, right? This gentleman here looks a lot like most of the families I see come into my office, just not sure what's happening. How are we going to do this, right? What you can do is use your present income, and if you can do that, great. That's wonderful. We find that most of the families that we work with don't really just have it laying around, right? It's not that easy. So that's sometimes not always an option for everybody. You can dip into your retirement savings. This is something that we're never going to recommend because you're essentially robbing your future to pay for today, right? So it's twofold of a bad idea. One, you're not going to have that retirement down the road, and two, each time that you dip into that retirement savings, it's going to show up as income on future FAFSAs, and you have to fill out your FAFSA each year. So every time you take that dipping into that 401k a little bit, it's going to show up as income. So that's going to raise your EFC even further. So not the best strategy on that. You can use any college savings accounts, so 529 plans. We find that most of the families that we look at have enough for maybe a year, maybe two to cover it, and then kind of get into it and then don't really know what to do past that. So they're great if you've got them, but not always enough, right? Should you take out some student loans? This is actually something that we might actually recommend here as we talk through these, depending on your situation. Having a little skin in the game allows the students to take out some student loans. It gives them some responsibility. We can show you all the statistics that show that these guys are really more involved when they've got those loans out, right? So not always a bad thing, and we'll talk more about those in just a bit. You can get scholarships. Shane talked with you about them. Great. If you can get them, that's amazing, right? But follow those guidelines that he gave you. Make sure that you're not paying for them, not giving out social security numbers, anything along those lines. And you also, again, want to check with the college and make sure you know their policy on how they treat those scholarships. You can choose a less expensive school. Again, this is something that we are never ever going to recommend. I've got an example of why coming up here in just a little bit. But just because something looks like it's more expensive on paper doesn't mean that in the end that it actually is more expensive, right? So we'll talk about that a little bit later. And finally, you can call relatives. So maybe Great Aunt Lucy has got some coffee cans full of cash buried in the backyard that she's looking to give to you. That's wonderful, right? If you can do that, great. However, it's going to matter even who pays the college, right? So even if grandma or grandpa or great aunt Lucy decide they want to pay for college, who sends the check to the school matters. We're going to talk about that in just a little bit. So all of these things can impact future years and future funding. So what are we looking at? So we talked about group one, the need-based families, right? You're looking at some of the abilities to get some of this gift aid, things you don't have to be paying back, right? So you've got your Pell Grant, SCOG grants, and MAP grants. Those are things that you want to be making sure that you're maximizing those as much as possible if you're in that group one. Groups 1, 2, and 3, you're going to be eligible for some of these things. Now, with the first one there, work study, we find that mostly it's going to be groups families in groups 1 and 2 that are going to be eligible for it. Group 3, it gets a little bit more difficult to have that in the budget based off of the income that's already there. But everyone would be eligible for the federal Stafford direct loans and the Parent Plus loans. What those loans are and kind of how they break down, we've got some slides coming up at the end here. So I'm going to break down the benefits of both and some of the negatives of both as well. So how do we get this money, right? I just listed out all the stuff that's out there, and you're asking yourself, well, Matt, how do I get my hands on it? First thing we need to do is fill out your FAFSA, or the free application for federal student aid. So with that one, we always say it's best to complete it as early as possible. Fill it out accurately. If you do make mistakes, it can cost you thousands. Again, I'll talk with you more bit about that. I work on the verification side at my school. So when you hear all those horror stories about financial aid and having to give all this information, that's my fault. I'm sorry, but it's it's required. So it's just a piece of it, right? So making sure you're not making mistakes and making incorrect information that'll really help you move things along. And it does have to be updated yearly. So if your child is entering here in the 2020 year, we were going to be using your 2018 income and tax information. So that's why Shane kind of talked about it being early, better to start early, not only academically, also financially. It's going to help you because some of these changes that you might need to make need to be implemented, 2 years in advance. So when the FAFSA is completed, it gives you what's known as a SAR, or a student aid report. This allows you to check it for accuracy, make sure you've got everything that you've done listed there. You've got the right colleges listed, making sure that all of the information you put down is correct. Again, be prepared to verify your information. They can request anything from W-2s to 1040s to bank statements to asset statements, anything along those lines. If there is a document or paper trail on it, they can ask you to verify it. The most important thing that your SAR will give you, however, is going to be your EFC, or expected family contribution. To answer your next question, yes, financial aid loves our acronyms because one, it just confuses you guys, and two, it makes us financial aid professionals sound incredibly smart when we're really not. So it gives you that information there, right? So you'll hear these thrown around your office, your financial aid office pretty frequently. But your EFC is essentially what you're expected to pay. Your objective is to lower that EFC, right? The lower your EFC is, the less you have to pay for college. The good news is you do have some control over that EFC. So all of these are going to come into play here when you're determining your EFC. It's going to be the type of asset. So is it a savings account? Is it a property? Is it a 401k? Who owns the asset? Is it a parent that owns that asset, or is it a student owned asset? And then who earns the income is also going to matter as well. So is it student income? Is it parent income? So once we pile that all together, right, you get your financial formula. So you take your cost of attendance, or COA. What that's going to do is basically be what's it going to cost to go to school there for that year, right? So let's use an example. If we've got $50,000 for a cost of attendance, and your EFC, or expected family contribution, is 30,000. That means you have $20,000 of demonstrated financial need. So we're on the hook for the 30, right? We know that we're responsible for that, but we got to figure out how to reduce that demonstrated financial need, right? So how do we get that down a little bit to cover these costs? Well, different colleges are going to fill these differently. Some will fill them with different percentages. You'll see it advertised that we fill 70% of your demonstrated need, or 50%, or whatever it might be. Other schools cover more than the end. So we've got an example here coming up that I want to run through with you. But essentially, this is what you're looking at, right? So you've got this, expected family contribution, that EFC that you're already responsible for, and this financial need. So what we want to do is lower that financial need, and see how the schools will fill it. They fill it in a couple different ways. So they can fill it with gift aid. So that's going to be grants, tuition discounts, any scholarships that they might be offering. Those are ways that you're looking to have the school in the college of your choice. You're wanting them to fill it with those things, right? Those are things you don't have to pay back. The other side of that is that it's going to be filled with self-help aid, right? So you've got federal work study, which is just an on-campus job that your student would be doing along the way. They're paid just like a regular employee to do these jobs. Student loans that they can take out, as well as those Parent Plus loans. So I'm going to go through, an example in just a few minutes, but it's really going to matter of gift aid and self-help aid. So when they say we fill certain percentages of need, making sure that we're maximizing the gift aid and looking at those. So with that being said, once we've got this calculation down, right, it's not even as easy as just saying, well, I filled out my FAFSA, so we're done. Different schools have different methodologies that they use. So there's two different methodologies. The federal methodology is going to be your most common one. This is what you just fill out your FAFSA. All of the schools using the federal methodology are looking at things the exact same way. Once you get into the institutional methodology, this is going to be more your elite schools. They can pick and choose what they want to look at and ask more detailed information on certain things. So you really want to know what kind of schools you're looking at. Are you looking at federal methodology schools or institutional method? The reason I say that is because I can give you strategies that will work for federal methodology that won't work for institutional. So you really got to make sure you're having all that information before you start making some changes. So well, we've got a great example family that we've kind of come up with here. So the information here is they're looking at three different schools, right? They've got a they've got an adjusted gross income of $100,000. They've got a $200,000 real estate investment, and they have $30,000 in a student savings account. So looking at this information, if you look at that before column, that's what their EFC is, right? So if you have all of this information and you plug it into your FAFSA as is, your EFC at Bradley and Clarion University is going to be $29,885. Now you see it's a little bit lower at Northwestern, and that's because they're using the institutional methodology, so they're looking at things slightly different. So if we make a couple of small changes here, if we take that $200,000 real estate investment and we do what's legally required to have it recognized as a business, that would then no longer show up on your FAFSA as an asset, right? It's a business, it's a small business, it's your business asset. So those are not going to be asked on the FAFSA. It's not going to show up as a question. So that is then being removed from the equation. If you take the $30,000 student savings account and move that from the student's name into a parent name, now you've saved yourself some additional money there as well. Parent assets are looked at, are assessed, I should say, at 5.6%, and the student assets are between 20 and 25%. So by making a small change of just moving that money over to the parent name, you're saving yourself almost 15% or more right off the top. So after you make those two small changes, you can see that the EFC decreases to 21,232. So before this, you're responsible for almost 30,000. Now we're looking at something close to 21,000. So once we look at what these schools cost, right? So we've got our EFC reduced. We're already ahead of the game, right? Now we're looking at costs of attendance. We look at Bradley, and it's a little bit high, right? 48,990. Now we go over to Clarion University. Their cost of attendance is a lot lower, about $14,000 less for their cost of attendance. So you would assume that these are going to be, Clarion's going to be the cheapest one out of these two. And then we go over to Northwestern, and we're looking at almost 80,000, right? 78,000 on this one. If we take our cost of attendance minus our EFC, and we're looking at this total family contribution, this is what your family's actually going to be, paying for this school. So if you look at Bradley, total family contribution, I apologize, is 28,726. Clarion University, your total family contribution is going to be 26,622. And finally, with Northwestern, you're looking at 16,921. You're looking at these numbers and you're like, Matt, that doesn't make sense. Why would the one that costs the most on paper actually be the one that has me paying the least amount of money? Well, it's a couple different reasons here. So the first one's going to be looking at how they fill that need, right? So you can see that Northwestern is going to fill 100% of that need, and they're also going to fill 91% of that with gift aid. So that's the things that you don't have to pay back. So scholarships, tuition discounts, things along those lines. Clarion University is actually going to have an unmet need of 51%, right? So they're only going to be filling 37% of that with gift aid. So they're not being very generous at all. They're basically just saying you can take out some more loans. Bradley, on average here, is actually looking better, right? So they're going to fill 73% of that need. And of that 73%, 71% is going to be gift aid. So they're going to be giving you those tuition discounts and scholarships and things along those lines. So once you actually start breaking it down, depending on how they're looking at it, right, you're actually going to be doing better at some of these more expensive schools, depending on what they fill, right? So on your college tours, we recommend that you're talking to them and say, hey, what percentage of financial need do you fill? And what percentage of that is going to be gift aid? Those are the most important questions. It's really going to be interesting to see kind of how that works out and see that, hey, just because something looks more expensive on paper, it doesn't mean that it is in the long run. On top of that, we're looking at some graduation rates, right? Northwestern has got an 86% graduation rate in 4 years, right? So, I mean, they're wanting to get you out, right? They're a prestigious school. They're one of the elite schools, so that's going to be along the line. Same thing if you're just comparing Bradley and Clarion University, 26% graduate in 4 years from Clarion and 54% for Bradley. So just on that alone, if you're going to Clarion, it looks cheaper on paper, but that just means that if you're falling into that same percentages, you're going to add another 2 years of school on top of it anyways. So it's going to end up being about a wash in the end. So you really got to look at the graduation rates. You got to look at all of these pieces, right? So for your graduation rate, what is the average percent of need that they fill? Most importantly, what is the percentage of need filled with gift aid? And then if you do have any scholarships that we talked about, any merit-based scholarships, ask about it, make sure it's renewable for 4 years. Sometimes schools will front load these scholarships and it's only good for 2 years. So you want to make sure you have the full picture. So Shane kind of talked about it a little bit earlier, but college is a business, right? Financial aid officer's job is to protect the assets of the college and to give away as little money as possible. And your job is to use the rules of financial aid to make your contribution as small as possible. So Kalman's got another great quote from his book that says, in choosing which financial snapshot to send to colleges, send them the worst picture you can find. Now, he's not talking about lying or gaming the system here. He's talking about using every legal means possible to present your financial aid picture to the college in a way that allows you to maximize the gift aid, maximize the things that they're going to give you. So this is the 6 biggest mistakes in paying for college. And I did list them all down as one, right? Just because they are all that important. And also, I could have made this slide say the 26 biggest mistakes, but we can only kind of scratch the surface here tonight on some of these. But saving in a child's name, right? That's the most common mistake. Again, the assets in a child savings account we talked about 5.6% for a parent versus 20 to 25% for a student. So if you've got funds in a child's name, it's usually best to get, I shouldn't say usually, it's best to get those out of there and into a parent's name so that, again, you're looking at the same amount of money, but it's being assessed differently. Paying for help with a grandparent or non-custodial parent. We touched on this. So the FAFSA lists down the parent, the primary parent, and then also the student. So they know who those two people are. If grandma sends money to the student, to the school directly, the school doesn't know who grandma is. So they don't know what that means, right? So what do? They see that income, that shows up as student untaxed income on the next year, and it's assessed at 50%. So by making a small change of saying, hey, send those funds through the parent, those funds are then available to us, right? So now we're not having that untaxed income showing up on the student. Using retirement funds to pay for college, we talked about as well. Again, the government will waive a 10% penalty to allow you to do this, but the schools don't care, right? You're not losing the penalty money, but it's still going to be listed as income. It's still going to be assessed at 47% for the next year, right? So even if it's untaxed, it's still got to be included on that FAFSA. You're not using the appeals process. Again, this is a big one. I'll talk more about it in just a minute, but when changes are made, things are coming up, you got to make sure that you're letting the financial aid office know. They do have the ability to make changes to it. We're looking at 2-year-old tax information, so a lot can change in 2 years. So make sure you're keeping your financial aid office informed. Not applying to enough colleges. Again, you can use some of these college financial plans against each other. If you're talking to an apples to apples school, right? You can kind of make those say, hey, why are they offering this? Is there anything else you can do for me? And then finally, not starting early enough, right? We talked about the use of 2-year-old taxes at this point. So not giving yourself enough time to make some of these changes can kind of hurt you in the first couple of years of that financial aid. Again, you can appeal this award, right? This is a big thing right now. A lot of people are currently struggling, right? The unemployment's because of COVID-19 is a big thing. Hours are cut and reduced. That doesn't show up on your 2018 taxes. If that's happening to you and you've got a student currently going or will be going in the next year, make sure you're talking to the financial aid office and appealing that award and see what changes they will make for you. So looking at the federal methodology, trying to figure out, hey, what do they assess? What are they looking at? Federal methodology does not consider non-custodial parent assets. It does not assess your small business value, does not assess any home equity that you might have, and does not assess any sibling assets. It does have some student income protection allowance. So $6,667 is what a student can earn to make sure that they are not going over that, right? That is kind of already included, so they're not going to be hurt for that. Anything over that amount will be included on that FAFSA. Now, the institutional methodology, take everything I just said and throw it out, right? They may assess your custodial parent assets. Home equity is often assessed. Sibling assets are assessed, and business value is assessed, and there is no student income protection allowance, right? So again, you just need to know which institutional or federal methodology your school is using so you know which strategies will be working best for you. So some income strategies that you can help use to help lower that EFC is keep your students' income under that protection allowance. Don't take any capital gains out during your income reporting years. If you do, offset those as much as possible. postpone bonuses, or if you're self-employed, any raises or anything along those lines, if you can postpone them until out of your award years, make sure that you're doing that. And time charitable contributions to lower your EFC. So um, you can accelerate some of those contributions either prior to or after your base taxes. You might end up with the same tax benefits, but again, you want to consult your accountant on some of these things to make sure you're putting them in the right time at the right spot. So what is an assessable asset? Savings accounts, cash, CDs, money market accounts, all assessable. Stocks and mutual funds. Mutual funds are one of the worst ways to pay for college because you get it twice, right? Any dividends or anything that come through on that is considered income and is assessed at 47%. And then also you've got the asset itself, which is going to be assessed at 5.6. So you get that double whammy on that one. Any bonds, even if they're tax exempt, any custodial accounts, UGMAs, UTMAs, 529s, covered Ls, any vacation homes, right? We talked about that in our example. Anything that's, vacation home wise, the value of that needs to be included here. If you're using that as a business or be able to convert that as to a business, then it would not be accessible. So what's not accessible are going to be retirement accounts, 401ks, IRAs. Those are going to be things that the FAFSA is not going to be looking at. Any personal items, so cars, furniture, dads, if you want to get yourself a new Maserati or buy mom some new diamond jewelry, go for it. Now, it's not good financial advice. However, it's not going to show up on your FAFSA. So you have that ability there. Any home equity, unless you're using the CSS profile, which is the institutional methodology, they may look at that home equity. Any cash values held with any life insurance policies, and any annuities as well. Those are all going to be things that are not going to be asked about on your FAFSA. So real quickly here, I just want to take a look at some of the borrowing strategies, right? So we talked about student loans and private loans. So the federal student loans that are offered that your student is eligible for just by filling out the FAFSA, everyone in all three of those groups is eligible for those student loans. So they're basically, they break it down to be a better choice generally. The reason why, fixed interest rates, and they're not credit based. We know that not every 17, 18-year-old has any credit or good credit, right? So the no credit really helps the students get that access to it. There are loan origination fees that go along with that. What the real key here is the repayment options. Income-driven repayment, so payments can be kept at 10 to 20% of the income. Students get out of school, they're able to try and get this income-driven repayment. The hope is that they're making the least amount of money they're going to make, so it kind of helps lower those payments and set them up for success. And then there's public service loan forgiveness. So if you're working for a not-for-profit and meet some other criteria here, the balance can be cleared after 10 years of working for that qualified employer. Now, there's a lot of hoops to kind of go through with that one, but it still is an option. Now, private loans are different, right? They may offer you lower interest rates, but they're going to be credit-based. And if the student doesn't have credit, guess what? They're going to ask mom and dad to co-sign it at that point, right? Now, then you're responsible for it. Typically, there are no loan origination fees, but there is also no income-driven repayment or forgiveness option. It's a loan. You take it, you pay for it, and that's the end of it. So those are the difference between the federal student loans and the private loans. Now, Parent Plus loans are something that are kind of a necessary evil at times, right? Not everybody likes them, but they can work into your advantage sometimes. So pros of it, it can be repaid based off of one parent's discretionary income, but you first need to consolidate in order to be eligible for that, right? So if one spouse makes less than the other currently in the salary, taking that Parent Plus loan out in their name can give you some flexibility down the road. There is potential for forgiveness in 10 or 25 years. And God forbid anything happen, it is discharged if the parent signing the loan dies or becomes disabled. The cons that come with it, it is at a pretty high interest rate of 7%. There is also a 4% loan origination fee. And every year you take out funds from that, you get that origination fee that comes with it. So just to kind of ramp it up here, taking off the summary of the cost reduction strategies, right? You got to put these all together, right? So you got the saving strategies, borrowing strategies, your income strategies, asset, loan, and appeals. Use that appeals, again, specifically now, it's more crucial than ever to make sure you're using that appeals process. since things are changing at such a rapid pace. And I wanted to close tonight with talking about those changes, right? These things are fluid. So I'll preface this by saying anything I'm telling you tonight can absolutely change tomorrow, because this is a $2 trillion legislation that was going out, and I believe it was like $20 billion towards financial aid in the financial aid sector. So there's a lot to unpack. So we're still working our way through that. But what we know so far is that students that are currently in college, we recommend you asking your financial aid office about tuition reimbursement, or even about housing and food allowances, anything along those lines, asking your school if they will refund those or reimburse those, or how they're handling that. The colleges, if you have been doing work study or doing work study currently, it's possible, again, it is by case basis, it's possible that you can receive those work study funds even though you can't work on campus due to COVID-19. Some of the good news about the student loans is that payments are suspended through September 30th currently, and suspended payments now count towards that public service loan forgiveness program. Before it wasn't, but they did make that change as well. So just a couple of updates, and again, these things are ever changing and ever evolving. So keep up to date with us, and we've got a great resource on our websites there for some information on that as well. But from there, I'm going to go ahead and turn it over to Teddy, and she's going to close it out. So Teddy, take it away.
Awesome. Thanks so much, Matt and Shane, for all of that information. If your heads are exploding right now from all of that new information, don't worry, because you have opportunities to kind of talk through all this information, see how it applies to you and your specific situation. So again, you're eligible for a free phone conference. This is with one of our experts, Billy Joe Wise, and she will talk with you for 15 minutes or so and just, again, answer any questions you have after tonight's webinar. If you want to take it a step further and you are eligible for both of these, so you can do both of these, you can sign up for a 1-hour free conference with our founder, and he will go through those college reports that Matt shared for the case study, except he'll use your own colleges that your student is interested in, and it will use your own family financial information. So that's a great opportunity to see how your finances are going to shake out and kind of compare costs, again, looking at that net price instead of that sticker price. So if you're interested in any of those opportunities, sign up at that link there. We're also going to follow up with an email that will share the link as well. You can choose a schedule, a day and time that works for you, and schedule that after tonight's call. Finally, I want to I know we're going a little bit over time here. We're going to wrap up in just 2 minutes. I want to share my screen really quickly now and share with you our evaluation form. I'm also going to go ahead and put this link in the chat. We would love it if you guys could fill out this really short evaluation form. I want to just walk through it here really quickly with you, because it's also going to give you an opportunity to, again, sign up for that, that free conference. So, sorry, I was looking at edit mode. So all you're going to have to do is put in your information, and we'll only use your email address to help you sign up for these 2 opportunities. We won't, spam you with tons of emails. So just give us your quick thoughts on the webinar. We really appreciate it, because again, we're new to this. Feel free to give us any of your candid thoughts. And at the end of the evaluation, you'll see this option. So you can check one or both of these to indicate that you're interested in scheduling. And then you'll see the link right here. So if you go ahead and click on this link, it will take you to a page where you can just find a time that works for you and sign up. And then again, due to coronavirus, both of these meetings will be over the phone. So I'm going to go ahead and put this link in the chat right now. And if everyone could just take 2 minutes before you sign off this call, please just fill out that evaluation form. Tell us if you're interested in more information, and we will follow up with you via email. Thank you so much for joining tonight. I hope you found this useful. And we'll stay on for just a few more minutes if anyone has questions they want to put in the chat. But otherwise, just take some time to fill out the evaluation form, and then have a great evening.